Okay, testing, 1, 2, 3, testing. Test again. Thank you, Mark Lay. Okay, everybody. Thank you so much for joining us here tonight. Sorry, one more moment. I just need to get the cross sound out of the way with two computers here. Okay, that should do it. Okay, folks, thanks so much for joining again. We've got our GIL Q&A. I'd like to do these at least once a quarter. I believe the last one that we did was back in November, perhaps, so it's been a little longer than a quarter. We've got a good amount of questions to get into tonight, so that's fantastic. Thanks everybody who sent some over during the day. I'm going to peel through those one by one. And certainly if you are online and you have a topic you'd like to discuss, just go ahead and you can put it right into the chat and I can address it there as well. But we do have a good amount of questions to touch on, probably a lot of the things that many of you are curious about. We've got, let's see, how many are online right now? Okay, it's a good start. We're a few minutes past 7, so I'm gonna get rolling, and people can join as we get rolling. So I wanted to touch on Timberline right out of the gate. Obviously, big news there today about the Tallapoosa option, and So here's the deal with Timberline, folks. I want to give you a little bit of background and behind the veil on what's been happening, because we got very, very close to, well, 2 transactions in the last 2 weeks. And as you know, I had mentioned before I went into a blackout period that I thought a deal would get done. And it did not. So what happened there was we had a publicly traded NYSE company, Comstock Mining, which I don't know if I should mention it or not. It doesn't really matter. They didn't do anything, but they looked at the deal, and I was expecting a tender offer for our shares in Timberline, premium to the market. And at the end of the day, even though the management was extremely interested in buying Timberline and the Tallapoosa asset primarily, but also for exposure to Eureka, they have some large shareholders, and the large shareholder in particular, the largest shareholder, said no. Said I'm not gonna. We don't want to approve a deal for stock when our own stock is at an all-time low. So I get that, and that's part of the reason why it was so attractive to me, is that if we had that deal combined where both stocks are at cheap prices, we could participate together in the recovery of the particular company as well as in the sector once it heats up again. And so I'm glancing, just as you know, I'm glancing over to my other computer to see where the questions are coming out. For example, Ryan Blackstone, I'll get to GGI in a moment. But thank you for the question. I'll just keep a pipeline there as well as in the email and start hitting them off after we talk about Timberline Resources. So then this deal morphed into a buyout of the option itself instead of the company. And that is what had really heated up in the last week and a half, week or so, and looked very good. You know, I think it was one of those situations where we would have gotten a good slug of stock as well as cash into Timberline's kitty. No NSR, no ongoing partnership, but we would participate with that company's stock. So that was the hope that we would get something out of it. And really what ended up happening, from what I understand, is that Gunpoint, who owns the option, there were a few different tweaks that were suggested by the buyer, and deal fatigue kicked in. They were going back and forth for a few weeks from when the tender was going to be done. And, we needed their participation because of some adjustments to the back end cash components. And they pushed it one more up until even like last Friday it was proposed to get that done. And Gunpoint on Saturday, I believe, notified Timberline that they were taking back the property. They weren't going to continue to make any tweaks to the option agreement. So it's unfortunate. It's unfortunate that we didn't get anything for it. My view on this is that basically a few things that are, I think, important. But, last year at this time when we wrote them a check for $1 million, we gave it a very solid chance for 12 months for the Timberline management team to go ahead and find a partner for Tallapoosa that would fund the obligations to Gunpoint. And I've always said Timberline's not going to be the one to fund. Maybe they could have done we did the 1 million, could have done the 2 million, but then we're staring at an $8 million payment next year. And so my thought was, I pounded the table last year at the $1 million, and we gave it a solid shot. We gave it a real shot. But then when we were looking at a $2 million payment, I said, I'd rather have this money just, if we were to give Timberline $2 million, we have a Eureka project with almost 700,000 ounces of gold resource. I've been to the property. I think there's millions of ounces of gold there. It costs some money to drill it out, but there's a lot of gold in Eureka and the Windfall area of Timberline's asset, which was their flagship asset for years until they acquired the Tallapoosa option. And I would rather have that money go in the ground. Part of the problem with the money we've put into the deal is it's gone to option payments as well as leaseholding fees. But we really haven't had any work done at Tallapoosa. So that's where it was like, look, no more money from the shareholders for the $2 million. You've got to find a partner. And I know the guys gave it their best shot. They've talked to dozens of companies. And I think that at the end of the day, the terms on what Gunpoint required with regard to the amount needing to be spent in the ground, the big option payment staring whatever company would take it on in the face in 2019. And then there was a trigger above $1,600 ounce gold for another $10 million payment. And, I don't think gold was robust enough for somebody to bite. And it really is a shame because this is a very advanced gold project, good grades, over 1 million ounces, 75% permitted in Nevada. So somebody's going to be able to take that into production. It's not going to be us, and we'll have to move forward based on what we've got. I expected a negative reaction in the stock, but I also feel like a lot of it is priced in, that we weren't going to get this thing paid out. The stock has remained weak, really alongside of the rest of the sector up until today. We saw, some selling come in and just in the last few days, actually, to where we closed at about $0.10 US today. So look, in the case like this, these are the types of things that can happen. I mean, we took a shot. We took a shot with Tallapoosa, which was a home run. My inclination was always that if it fell to this, we don't have nothing. You know, it's not a shell. We have two really good projects in Seven Troughs and Eureka. But, you know, the people that are going to say, screw this and move on, we need to give them a couple days to a couple of weeks to do so. And I'm also not delusional. There's no reason to be married to a story, except in the junior market. You have to be careful. If you try to sell on news like this when there's really very low liquidity, then you're not going to get very good prices. So at a minimum, you know, if you decide that you want to get out sooner than later based on the result of Tallapoosa not being part of our upside anymore, then I would say, you know, you want to pick that spot. Where is that spot? And I think, you know, with gold popping above 1,400 and the miners having an improvement, Timberline's going to participate with that. And it's going to be a decent story. It's not going to be one of the top plays in the junior market for now. I think they've got to make some decisions. We as shareholders really need to make the decision about which direction to go in vis-a-vis, do we just put some money in, get drilling at Eureka? There's some very interesting targets at Eureka that I think could really heat this thing up quite swiftly. Do we acquire another project? There's a lot of stuff, not a lot of stuff, but there's some good stuff out there that is still very, very cheap in accordance to valuations from the past in terms of just gold property. So I think that even precious metals in general, or on the base metal side, there's a lot of opportunity out there for a company like this to acquire stuff. And really, I mean, the way that I'm viewing it, I'm not opposed to it. There's no decisions that have been made, but maybe this ends up being my own vehicle, essentially, that I would look at and take a bigger stake in Timberline and look at it as a vehicle to build an exciting gold junior exploration company. I haven't made any decisions as it pertains to that. And there's some discussions to be had with management, the board, and some of the larger shareholders this week and next week. And so I'll keep you guys posted. You know, the worst case scenario, I think, unless you bought the stock in the 40s US, is that when there's a reason to average down at all, or even if you don't, and you have a cost at 25, 30 cents US, you'll have an opportunity to get out of this without losing any money. That's my inclination. Even if it just stays as it is, in a better market, Timberline will participate in that. And even though we've had this sell-off because of this event, it will recover along with the sector. So it wouldn't be one of my foremost picks because of the way that this is playing out, unless some things happen. And so I'll just try to be as clear cut as I can. But I had a couple of emails with people that were upset about this option payment not going through, and they essentially were surprised that this was even a possibility. Well, I don't know how much more clear I could have been with regard to everybody knowing that this payment was impending and believing that I thought a deal would happen, but that there's no guarantees with this stuff occurring. So I'm not happy about it necessarily, but I also don't have a doom and gloom attitude about it either, because, you know, we still have a vehicle to move forward with. And there's a lot of ways to spruce it up and make it another good story over a little bit of time. It's just really going to take time. More time, if anything, than we had hoped, in sort of the hope that we would get a deal done and see a pop in the stock with a partner coming on board. So my suggestion, though, is that, you know, we let the dust settle a little bit on Timberline in the market. That goes for both the buying and the selling side, really. I mean, I'll nibble if it's under a dime US, but you know, and you might get some stink bid opportunities by people that are hearing the news, you know, late today, tomorrow, they just say screw it and they move on. But you know, let's let it shake out here for at least a week, and then it'll firm up. I think it'll probably firm up in the 10 to 15 cent US range, and then we'll go from there. But I don't think it's the end of the world for Timberline. It's not the best case scenario, but it's not the end of the world. I will remain supportive in terms of moving this thing forward. It's not going out of business. That's not going to happen. So So let's move on with Q&A. We've got a lot of companies to cover. I'm just going to hit the lights, and I will be peeling through the emails. And I think actually what I'll do is I will start on Garibaldi. One moment. Okay, so you guys may have seen today that I had an interview with Palisade Radio on Friday. It was just put out last night. You may want to check that out. I do touch on some stocks, including Garibaldi Metallis as really my top base metal picks. These are ideas that, listen, I mean, I've been in this business for a long time. I was a stockbroker from the age of 20, and I won a high school mock-up stock market portfolio competition when I was 17 years old in the state of Wisconsin, which is what really was the entry of my interest in the markets. And so I've been doing this a long time. I'm 42 now, and so call it half of my life. I've really played in more of the risk associated areas of the market, alternative investments, venture capital, individual growth stocks, junior miners, all things that have very high risk reward. And I've learned a few things along the way. And, mainly, I think what's important for people to understand, whether you're new to the gold investment letter or you've been around, you have to have more than one bet on the books first and foremost. You have to view, especially with the junior miners, view this as a venture capital portfolio. Meaning, the way that I look at that is, if you're going to start investing in venture capital, say you're doing earlier stage investing where there's a tremendous amount of risk and also upside, the idea would be that you would put your money into 7 or 8, 9, 10 different companies in equal amounts. And let's just call it 10. Say you did 10 deals over the course of a couple of years. Probably 5 to 6 of those would go bankrupt. Probably 6. It's the startup numbers in general are that 85, 90% of startups go broke in the US. But when you're venture backed and you're already sort of at the top of the food chain in terms of what you're attracting with funding and things, the number's lower. So call it 6 out of 10, maybe even 5. But the idea is that for a fact, you just don't know exactly which ones are going to play out that way, that you're going to lose all of your money on a number of those stocks. However, you're going to have a couple of them that either break even or they end up doing modestly well. And then you're going to have one that triples. And then you're going to have one of them that goes up 40 times your money, or 10 times, or 30 times, or 100 times your money. And that's how you make money in venture capital. That's a theme. And I think that having a basket of stocks in this area, in the mining sector, is very, very important. But I also have had a good record despite Timberline today, with making some aggressive calls and going in pretty big on deals that I saw a lot of upside on and hitting on them. And it doesn't happen on all of them, obviously. And sometimes you swing the bat and you miss. However, I've had some huge winners. I mean, I mentioned it on the Palisade interview, but those of you that were with me when I started this newsletter, which was in 2011, and that were around for 2012, I found Zenyatta Ventures, which was a graphite discovery in Canada. And I went in big. I made it my top pick. I didn't have a lot of readers, mostly my old clients from my brokerage days, but I ended up making it my top pick in August of 2012 at 18.20 cents. And the stock ended up going up 25-fold within 11 months. Actually, it was a little more than that, depending on what price you pick, whether it's 18, 19, or 20 cents. But let's say 20 cents, it went to $5 in 11 months. And things like this have happened. I mean, we ended up in the premium group. identifying Metallus in August last year at 25 cents. That's where I recommended it initially. And the stock went up 11x in 3 months. So, these things happen. You're going to have deals that do that. If you're playing with the gold investment letter picks, you're also going to have some disappointments. The key is, I think, that you have to spread out relatively the same amount of money in different ideas as it pertains to the juniors. And then, developing a strategy around how do you end up taking profits. I think the wisest way to go is in the juniors. If you think that there's massive upside, you still should sell a third of the stock at a triple to take your principal risk out. Some people do half at a double. That's fine as well. But I think that that's a good strategy as you end up, making these bets for the big winners. So in any event, two of the companies that I feel have that type of potential from here, the 10x, 25x, even though we already saw it once with Metallus, are Metallus and Garibaldi. I think that these two stocks are going to fly, and they're going to start to act a little different really soon. And I think what will trigger that is that Garibaldi will recommend or will announce that, they will announce that they're mobilizing their drills and they're back out in the field in the Golden Triangle, which is a very severe weather area and has some brutal winters. But from what I understand, the weather now has not been that bad. And I think that they are going to be the first ones back out onto the mountain, and they're going to be very eager to get rolling. And once we know that the drills are turning, people are going to start to anticipate a continuation of the high grade hits that they had last year. In fact, the next hole is lined up, I believe it's 15, that from what I've seen and what's been outlined, there are going to be some very, very good continuity results in terms of grade, super high grade, and these are going to be step out drills. So it's going to grow. I mean, one of the things that people start talking about is there's not the tonnage there. The grades are there, but they don't have the tonnage. They've only drilled 14 holes. You can't sit here and talk about tonnage yet. We're going to get a better idea for that this year. But I mean, come on, people. This is going to grow. This deposit is probably going to have multiple discoveries. If you listen to Dr. Peter Lightfoot, this is what I end up doing. I have to find experts in the geological area that know what they're talking about, and then determine who's right and who's wrong, or if they are valid or not. And Lightfoot's the best in the business as it pertains to nickel. So I'm heavy. I'm big in Metallus mainly, but also in Garibaldi. I have a very solid position. I would look at Garibaldi as the more, if you want to call it conservative of the two, because they're more advanced than Metallus. But with the information Metallus has now, the lower market cap, Peter Lightfoot guiding them, with this next drill season, they could really break out in a bigger way if they prove, in fact, that this is all the same structure, which is really the SK Rift, which Russ Huntington, you're asking about SK Mining as a neurology play. So here's my thought on that. So at the end of the day, Ryan Blackstone, GGI, my update is you should be very long the stock going into the summer drill season. I expect a lot of fireworks. I think that Garibaldi will minimally double from here in the next 6 months, and will very likely actually break those highs by next fall and go to new highs. And if they start to really crank out more of this unbelievable 8% plus nickel, 4% copper, and start to show that there is tonnage there, and it could be massive tonnage, then this thing could go very, very high. It could go to $10 or $20 or $30 a share. That's possible. I'm not saying it's going to happen. We need to find out what's in the ground, but it's possible. And Metallus then would, retest highs at 280, which is like a triple from here almost, and eventually go much higher, 5, 10, 15 bucks if they've got the same goods and they're piggybacked on Garibaldi. So long and strong there. I've looked at SK, Russ. I've talked to the CEO. there is a possibility that the structure ends up going into their property as well. I'm not convinced on it that you need it. Like, who cares? You've got Metallus is the neurology play to Nickel Mountain. That's about as far as we need to go to bet big on this thing. And if it's going to be very, very huge, we will make so much money on those two stocks. There's no need to take the risk at SK. It won't perform as well, I don't think, at least in the near term, to either of these two stocks. And those guys ended up wasting the entire drill season last year. They're making adjustments to go after this arena and start testing for the nickel. But I don't like how passive they were last year. And, they've got a pretty good sized market cap, if I recall, and I don't have it in front of me, but these guys are 100 million shares, I think. I'm going to look it up so I'm not talking out of school. So you're talking about, 110 million. So $28 million market cap. It's not necessarily dirt cheap. It'll probably do well. It'll probably do well because of the gold market breaking out. It'll probably have some rubbing off from the vibe and the energy from Metallus and Garibaldi. But I just don't, I bought some before. I ended up selling it to raise some cash for something else. And I'm just betting a big on those two. But Russ, it might do fine, might do well. And then we've got on Metallus, really lastly, before I move on to other areas, Metallus has got, we've got 31 million shares, $35 million market cap, and we are right next to Nickel Mountain, right there. You can see it from that property. It's very close. And yet, Garibaldi, which definitely is more advanced, has $250 million market cap. And so there could be a big gap that's closed there. And that's really what I'm betting on. I have almost 250,000 shares of Metallus. Half of that I paid $1.15 for in the recent placement. So I'm betting big. And this is another thing. All I can tell you guys, like if you end up having a whack in the face, like on Timberline, and you're disappointed or you're upset about it, what I can say is that I don't think there's one elite member that may have more stock in Timberline than me, but I have a lot of money invested in that company, and most of the investment came in at 15 and then 25 cent in the placement, and then a lot of open market buying as high as into the 40s, well into the 40s. So I'm right there with you with my own money, and the same thing is with Metallus. If Metallus hits, I'll make $1 million. If it goes to shit, then I will lose a lot of money. So I've got my money on the line though with these plays that I'm telling you to go in and try to, make a heavy bet. Garibaldi, Metallus would be part of that. Okay, moving on. Sorry to belabor that. Let's go to Eric. I believe you're correct on gold breaking out, but how soon is the real question. Seems to me the dollar's direction may influence the when, as it looks to be making a bottom and could rally for a while. Having said that, Trump and trade disputes complicate the view. Appreciate your insight. So, John, we can't get lost in the weeds with regard to what's going to happen this month, next quarter. Certainly with trading, you have to pay attention to these things. And if the dollar just hits support and is going to bounce, you want to pay attention to that. But we had a strong dollar in the last bull market of gold in the early 2000s for a good period of time that was going on. And gold still was extremely strong, even priced in dollars. And, one simple thing to think about is that since 1971, when the link was clipped, with Nixon, with the link from the dollar and gold, every single Democratic presidential term, the dollar was higher after it ended from when it started. So if you had a period of time with Bill Clinton, for example, who was in office for that first 4 years, the dollar was higher at the end of his term. It was also higher from the second term beginning until at the end of the second term. every single Republican president, the dollar from when it started was lower when they left office. That's going to be the case, I think, again. So how severe will that be? I don't think the dollar looks very good. Certainly in the intermediate term, it does not look good. In the longer term, I don't think it looks good at all either. In the short term, it could bounce a little bit, but I think the trend, the overall trend for the dollar is lower. And it's, all this stuff with trade disputes and tariffs, this is a global market. And I think if you look at gold from the lens of the Canadian dollar, from the ruble, from the Colombian peso, the Brazilian real, gold is very close to testing 2011 highs. I think that's where we're going. The dollar has been extremely strong, stronger than anticipated, I think, for quite a while. And there's no way around the fact that we have $21 trillion deficits that will never get repaid. The only way that there would be any thought around that is with a debasement of the currency, and that's what we're going to continue to see. I think another interesting statistic, I talked about this a little bit on the Palisade radio interview, is that if you take a longer term view, since 71, gold has increased 3,300 and some odd % in price from then until today. 8% a year, averaging 8% annually in terms of that increase. Now, if you add inflation into the mix, it's closer to 4.5%, but that's a net return on gold. If you think about the purchasing power of the dollar from 1971, I wasn't even born yet, but I can remember buying candy bars in 1980 or, in the early 80s or the late 70s even, for 20 cents, 25 cents that are now $2. I mean, you've got an 80%, 75%, 85% haircut in the value of our purchasing power in the dollar. So this is, when you take the longer view, over periods of time, gold does its job, and it's a place where you have to have some capital. And I think that the biggest thing right now is based on not necessarily just the dollar, but gold getting through 1375, 1400. It's a big, big deal. And I can't share all the charts with this new computer that I have for some reason on my screen. I'm going to give it a shot here, and I might even just put my picture up for a little while. Let me see if I can share it and show you some of these charts. Otherwise, I can attach some of those when I send out the replay. But we've got a situation here where this is a very, very substantial breakout when this happens on gold, and it's going to change the vibe and the entire way that gold is viewed. I can't share my screen, unfortunately. So I think that at the end of the day, John, we'll see what happens with the dollar. I think over time it's going to do what it's always done, and that's become diluted and lose its value. This one used to be quite bullish on Orca Gold. They've had several great press releases this year, but you never mention it anymore. The feasibility studies due out in the second quarter. Drill results out today were fantastic. Are you no longer a shareholder or supporter of the company? So guys, here's where you need, especially if you're a free member, to cut me some slack. I try to provide a lot of good free content, but my duty is to premium and elite subscribers that pay me money in terms of how often I'm going to keep them updated and you updated. Just because I don't talk about something, and I actually have mentioned Orca, I certainly have mentioned it in the last month or 6 weeks or something. But if I don't mention something for a while, it's because nothing's changed. And nothing has changed on my view. But you've got to cut me some slack on how often I end up covering every single idea that we bring forth to the free members, because I update things when I can and when there's something to talk about, and I try to rotate features of these companies to say, hey, we like this 15 different stocks, but if I keep talking about all of them in every single update, it gets very diluted as well. I think that, I like to focus on 1, 2, or 3 of them in updates so that we can focus a little bit better. And I tend to rotate that, but you're absolutely right that the drill results were fantastic yesterday. And the feasibility should be a nice catalyst. I think that when you see the gold market start to improve the environment of the gold juniors, Orca is going to be an absolute stud. An absolute stud. This is one of my bigger holdings, and there is absolutely no doubt in my mind that Orca will lead the pack in terms of performance in mining stocks in general in a better market. It goes to show how rough this market is with the gold stocks when you've got something like Orca coming out with 123 meters at over a gram, and it basically has a small blip up on low volume. It's a very lethargic dead market. And when that changes, Orca is going to hit its stride, and it will absolutely rocket higher into the $1 to $2 range very quickly. Once we see that could be on the breakout of gold. It could just be on the gold stocks anticipating the breakout of gold here any day when that starts to change. But Orca is going to be a major, major winner for us. And nothing has changed in that regard, Wani. Next question. So Russ, on the Orca 10-bagger, I think it could be a 10-bagger. I think it certainly could be a 10-bagger. I think Orca is an absolute no-brainer, very little risk that it's not going to triple from here. Going up into the high $1s or $2 is just like a slam dunk to me. When you start to get into the 10-bagger, the interesting thing about that, and I'll do the quick math while we're talking, but if you think about the success that they had at Redback with the exit to Kinross in 2010, that was a $7.2 billion US dollar exit. It was over 9 billion Canadian. Where are we at today? Let's take a look. So our market cap is 98 million. So if you look at, I've used this example before when we were down in the 40s, it still applies. So say Orca has 10% of the success on eventually getting bought out that Rick Clark and Hugh and Lucas Lundin and the team had at Redback. If it's 10%, that would be somewhere in the ballpark of 900 and change Canadian million dollars. That's 10% of the success they had before. And I think that they're as, if not more, excited about what they're doing in Sudan and Cote d'Ivoire than what they had before. And they hit the timing amazingly, but you're looking at about a 9.5 bagger from here to get to 10% of what they did with Redback. So, you can figure out if you think that that's feasible or not. The bottom line, guys, is that anything is possible depending on how high gold goes. Think about where these stocks are going to be priced when gold just retests its 2011 highs around 1900. I mean, they're going to be so much higher and things are going to be so different. And there are going to be people that are starting to say that these stocks are then going to go up 10 or 20 fold from there. And they could. It's really going to depend on the health of the gold and gold share market, which I think is going to be very powerful once it finally kicks back into gear. Okay, next one. Roger George, virtually every report and pundit's opinion that I've read in 2018 suggests gold will go higher, and each have their own and often different reasoning. However, there seems to be a disconnect between these bullish sentiments and the relative weakness in the exploration juniors compared to their share prices in 2017 when gold was in the 1200s. Have cannabis stocks and cryptomania sucked a lot of the speculative cash out of the exploration plays? So, listen, I think that depending on which pundits you're reading, if you're susceptible to listening to King World News, Roger, and all pro-gold websites and analysts, then everybody's bullish. But when I look at a broad view of the street, I see a lot of bearishness out there. There are so many regular managers that think gold is just this perpetual dog. And I think the evidence is in the allocations. There's really not a lot of allocated capital with institutions in the gold market. And that's going to change when it goes over 1,400, because people are going to know that this is a massive breakout above what had been resistance for years. So that's when I expect things to shift in terms of actual money flow, which was what I would look at as being one of the most important pieces here. So, you look at the sentiment overall, and I think it's weak instead of people being extremely bullish, don't you? I mean, part of the reason for that is because of the relative weakness in these names. And that not only is in the exploration juniors, but it's in the producers. Everything from Barrick to Goldcorp to Kinross to First Majestic on the silver side. I mean, these stocks are down. First Majestic's trading at $6 US. It was at like 24 in mid 2016 on that initial explosion higher. That's a lot of angst, with people that bought on that run up. They're not feeling very bullish. I can tell you that much right now. And same thing, we look at McEwen, it went to $5 from under $1, now back to $2. A lot of people bought that stock at 3, 4, 5, and even some that are still holding from 2010, 11, where it was $10. So I don't think that the sentiment is actually very good in the market in general. Maybe for certain pundits, as you said, and I'm very bullish, but I feel like I'm very bullish for a reason, and the reason is not yet 100% triggered yet, which is what we need to see, which is that 1,400. I'm trying to be prepared for it and trying to convey the importance of, once that occurs, it's time to deploy a lot of money, because you have to put money into the earlier stages of these explosive moves if you expect to get the big returns. But your point about cannabis and crypto, I think that already happened, right? In terms of the small plays, yes. I think we did see some money sucked out of the sector, and a lot of money was made and then now kind of lost in cannabis and crypto. So we'll see, how this stuff works, right? The herd ends up making a move later on. So you'll probably have a lot of people that'll end up dumping their cannabis and crypto stocks at the lows. And once the precious metal stocks start to rock again, and then they go back into the miners after they've doubled again. And that's going to be what happens. So I'm not worried, though, about it in terms of what's going to really drive the market, Roger, is when the big institutions start to buy big-time gold, big-time exploration stocks, big-time development stocks. That's all going to trickle down into the exploration plays, and they're going to move the biggest, as they always do. Number 2, will Trump's erratic economic policies and threats of trade wars offset the gains that loosening some environmental regulations brings to the mining sector? No, I don't think so. Erratic, yes, but that's good for gold. Gold does well when you have a loss of confidence in government, right? When there's a lot of uncertainty, when there's a lot of things that are going wrong or perceived to potentially go wrong, when stress is high, gold does well. So I think the erratic part of it is going to be bullish for gold, because people want some level of predictability and stability. So I think that's good for gold. And the environmental regulations, these are marginal positives. What I'm looking for is money flowing back into gold as an investment from central banks, institutional investors, and that will lift this stuff up higher and bigger and faster than we can shake a stick at. It's going to be very, very powerful when it happens. But this is a marginal thing, I think, that you're pointing out. And I think there's a lot of other bigger trends and forces that are going to move this thing to the place that we want it. Number 3, there's no doubt the mining camp around Cobalt, Ontario has good grades of cobalt and silver. Will outfits like CCW have to keep drilling and doing economic analysis for several more years, or will they be able to sign offtake agreements and move to production faster than might be expected? I think with this, Roger, it really comes down to, I don't necessarily want Canada Cobalt to take the project into production. I'd rather have them continue to prove it out, move it forward, And when cobalt's going bananas, they get bought out. So offtake agreements could happen, though, certainly before that, and that could happen and predicate any move towards actual production. In Canada Cobalt's case, I'm talking, I guess, a little bit more generally about a exploration company going into production, which usually isn't a good idea. It's hard. It's very hard. You have to raise a lot of money, and usually you want a bigger partner that's either going to do that or take a big piece of the risk off the table, which could happen certainly for Canada Cobalt. In this case, because they have the ability to potentially produce on a smaller scale without big capital expenses, then this could be a situation where we do get some marginal production early on. But I would expect the offtakes to happen within the next, call it 18 months. I wouldn't be surprised if we see an offtake or two. We could see it even this year. I know that they've been working with a lot of Asian outfits that are looking for supply. But really what I want to see is the continued drilling out of very high grade cobalt, some actual length and width that's going to end up pulling this all together that could outline what could be a very robust mine. The silver grades are good, but the cobalt's been fantastic, and there's a lot of potential there. And again, this is one of those situations where, with the underground added and underground exposure and access, they have a real advantage. They also have a processing technology that could end up really adding some value to their market cap. But there's not a lot of really high quality plays out there yet. This is not a saturated market from an investment perspective like lithium. So it'll be fun to watch. And I think it's going to be, the stock is back to being a very strong buy in the 20s. And people may want to boost your holdings there because cobalt is going to continue to do very, very well. What catalyst do you see? Hold on one second. Let me go back to our chat here. CWS, the FTEC I do still like. We're in a situation there where this is a massive pullback in the blockchain stocks. So I'm long-term bullish on blockchain and crypto. I think I indicated that today with the special report that we're releasing. And stocks like FTEC, these groups of juniors, they're small cap companies. They raised a lot of money, a lot of them, and they have a lot of money to deploy and start to build the businesses. So we saw that huge ramp up. Let me put myself back on here, the camera. We saw that huge ramp up. A lot of money came in, and then now there's the crash where they're building the business. And a lot of these companies are going to build a real business, and then we're going to see the curve back up. Whether or not, a lot of the prices in Bitcoin and other things recover and go back to new highs, or if they just flop around between 5,000 and 15,000 or whatever happens there, some of these companies, their stock prices will do well as they end up showing out a proven economic model. But right now, it's mainly a function of sort of a short-term bubble popping. We've gone from 60 cents to 14 cents for FTEC, and the only reason for that, it has nothing to do with their particular corporation. It's the case with all the blockchain stocks. My thought is that these are worth nibbling on right now, and that goes for Hilltop Security, Blockchain Capital, companies like that have been absolutely smoked. What I would suggest is you just stick with what you bought and make sure that you do add a little bit more, probably now. I would say do some, grab some FTEC below 15 cents and then have a little bit more dry powder, if it gets whacked one more time. But I think it's very, very cheap, and it is oversold. A lot of these stocks are very oversold, and FTEC is also trading right off of its 200-week moving average, which should be very strong support. Back to the Q&A and email, one second. What catalyst do you see causing CCC to head higher? That's our Cornerstone Metals vanadium play. So in the short-term drill results, we could see them tomorrow. They've got another chunk, 2 batches, in fact, I think, of drill results from what they've already done. at the Carlin project in Nevada. They've clearly had better success than hoped from historical readings on the grades with their reconfirmation drilling that they've been doing. That could send it higher. Vanadium prices in general are doing very well. They're now above, I believe, $15 a pound, and they are going to benefit greatly from the Chinese requiring higher vanadium levels of concentration in steel later this year. That starts in September. So we're not even talking about the supply demand dynamics for the redox flow batteries or battery demand for vanadium. This is for steel. So this is a traditional application, which normally wouldn't see a tremendous amount of growth, that now is going to be forced. Companies are going to be forced to have more vanadium by the Chinese government. I think that's going to be a big deal, and I think you're going to hear a lot more about that in a few months. And as the summer starts to roll in, and then certainly once September hits, when that comes down, vanadium could be much higher in the 20s. And Cornerstone's got the potential, folks, to go who knows how high. This is really going to be a good stock for us. It started from a very good, tight share structure. You know, they ended up just raising $3 million, so that'll be about 10 million shares. But, you know, before that, there were only 20 million shares outstanding. So we've got 31 million shares outstanding, less than a $10 million Canadian market cap. If you look at some of the comps, you can find this on their website in their presentation. I would encourage you guys to go through that. It's newer, and everything from Prophecy to Stena to what's the other one? Is it Largo? One of the bigger producers. Cornerstone is extremely cheap still. So the catalysts are going to be drilling. They're going to be vanadium prices. They're going to be the battery trends with vanadium is going to drive this stuff higher. The quality and the size and the grades of the Carlin deposit as they grow this. And now they have $3 million to throw at it. So I think they're going to be very aggressive in proving this deposit up. I think CCC could go to like $1.52 this year. It could. I'm not saying it's going to for sure or anything else, but I think it's got a good shot at that. Certainly, I'm not going to sell much stock until it's at least, I wouldn't consider anything meaningful until we're closer to $1. So on weakness, I would say, you know, continue to boost Cornerstone. I think Cornerstone is the only stock you need to own in vanadium at this juncture. It's the best one out there. What is your number one stock pick for 2018? I'm going to have to go with Metallus on that one. You know, I think Metallus has massive upside. Your next question is, do I have a preference between GGI or Metallus? I'm saying Metallus only Metallus. So, excuse me, let's be clear. When something has more reward, it has more risk. There's always a correlation. So Garibaldi is further along. They've had evidence of this nickel deposit. They've got data going back to the 1960s from Union Carbide that has drill maps and more information that they've been working off of versus Metallus. And, you know, so it's less risk, even though when you balance that out against the fact that it's trading for $250 million market cap versus a $35 million market cap for Metallus, I'm willing to bet that this is the same structure. Metallus is going to have some success in proving that this drill season, and that gap in the valuations is potentially going to tighten, and it could tighten where they're both moving up. That's what I think is going to end up happening. But what if some of the sources of this ore body are actually in the Kirkham camp? What if that happens? I wouldn't give it a majority possibility, but I would give it a real chance that Metallus has got a very, very significant piece of what they're pulling out of Nickel Mountain. So that's why I like Metallus a bit better. I'm willing to take the additional risk, which also means that because they haven't hit those veins yet, and Garibaldi has, there's more risk as well. There's a chance that they could decouple on the downside if they were to fail, for example, with their drilling. I don't think that's going to be the case, though. I feel confident that they're going to hit some really juicy stuff this year, and people are going to be very excited. And Metallus has other really interesting gold and copper porphyry targets that are in the south. They have some very high grade targets there as well. So I think that Metallus is just a very reasonably priced, reasonable valuation play that could have massive upside. If Garibaldi gets really hot and say goes to like $10, Metallus somebody's going to have a bidding war for Metallus also. And somebody's going to want to buy it, and they're going to pay up a lot. So I would have to go with Metallus as my top pick. Does the recent market weakness volatility concern you going forward into spring and summer? I think you're talking about the general stock market. Listen, I mean, if you have a washout, a real scare in the stock market, we have seen before that the mining stocks can end up being affected in the short term. But I believe that what will happen is you're going to see outperformance in precious metals and in mining stocks, even if we see that initial reaction, something to the effect of what happened in 2008 and 9, where the gold miners ended up recovering much earlier than the general market did. And I don't even think the general market has to necessarily recover this time. And I don't know that the bull market in the stock market is over yet. I mean, it's a tricky one to call on the timing, right? I mean, that's been the biggest danger in trying to get overzealous about the market finally cracking. But it's not going to maintain this trajectory from floods of liquidity and easy money printing when now you've got headwinds on the interest rate side. It's not going to last forever. So is it going to be now? I welcome the volatility. I think that what we don't want to see is the S&P getting cut in half in 2 months or 4 months or 6 months. But if it starts to roll over and we see a very crappy market with a lot of concerns out there and inflation starting to rear its head, gold's going to do well. And I think the mining stocks are going to start to really catch their stride. So, not necessarily all that concerned about it, Brian. I don't also pretend to know how exactly things are going to play out once the market does start to really hiccup, how much that's going to affect the miners. My sense is that it's going to affect the miners to a modest degree, some degree in the beginning, and that they will recover and start to trade in exact opposite of the overall market at some point. Let's see here. Bonnie, with Cornerstone and Medallion, the question was, do you see them trading in tandem? I don't. I think that what Medallion might be able to do is trade somewhat in tandem with like a Cobalt, where you've got a real correlation with adoption in the electric vehicle market. But there's also so many other applications for the rare metals that I don't know. I think they're going to be a bit of an animal on its own, but catch the tailwinds and have some intermittent spikes within the electric vehicle story. And that really hasn't caught on yet. But if you recall, vanadium is not an electric vehicle story. It's a redox flow battery and a battery metal. And the difference being that vanadium is not applicable in these smaller allocations inside of a vehicle or a vehicle battery. They're more for major, massive enterprise electricity grid applications where you don't really have issues as it pertains to space. If you could use, if you have the space to put in a tractor trailer sized device or unit, then you're not going to have an issue with. You're going to choose vanadium over lithium or cobalt. Any applications that they tweak with less or more nickel or copper in the new generation of the batteries, because they're just superior. Vanadium redox flow batteries continue to charge themselves. They're lasting decades, potentially longer than lithium ion batteries. So This is going to be for a separate application. I'm talking also from just clarifying, the electrification of vehicles versus the quote unquote electrification of battery applications in general. And as far as Medallion goes, I really see that deal catching a bid with the rare earth sector. I think that the sector is going to end up coming on the radar of just having continued demand with some supply issues outside of China. There's going to be more talk of it as it pertains to neodymium and the need for it within the electric batteries. So don't see it, though, correlated with Cornerstone. Bravada Gold, I'm very bullish on. Bravada Gold's a good example of a junior gold stock that's gotten crushed for the reason of the sector being weak. There's really been this is where you have to determine, and also why sometimes I don't talk about certain stocks for long periods of time, because nothing has changed. This is different from if we were betting on a growth stock and it was a earnings play, for example, an operating business, and you're looking at the quarter to quarter, month to month numbers, and something changes, their business slows down or costs skyrocket or whatever that may be. With the exploration stocks, you've got assets, what the assets are. Really, you're making a bet on what is the underlying commodity going to do. Do you believe it's going to be in a bull or a bear market? Is it going higher? Is it going lower? To whether or not you want to own these ideas. And I think that with Bravada, it has a very interesting prospect generator model. And that means that Bravada Gold is, they go out there, they find the projects, they drill them up, they bring in a partner, the partner spends the money and ends up either buying the project or hopefully potentially taking it into production. And, Bravada's got some very, very solid prospects. They have 1 million ounces at Wind Mountain. Let's look at the Bravada market cap, which I haven't looked at since the last raise. But, at 9.5 cents, Bravada's got a $4.5 million US market cap. So let's call it a $3.5 million US market cap with 1 million ounces of gold at Wind Mountain as the foundation. So let's call it $4 an ounce of gold in the ground is what you can buy into Bravada Gold for today. And that doesn't include their other 13 properties, which all have varying amounts of value. Certainly a few of them may not have a lot of value because they're very early stage, but Joe Kiesis, the guy who runs it, has been around since the 1970s as a geo, and he is a legitimate one. And so some of these projects have very, very good qualities to them. We still have several partners that are drilling out these properties based on earn-in agreements. We did get a couple of them back in the last year, which is fine. And they're out there shopping them again. And I think we're going to see some deals from Bravada this year, certainly maybe even this quarter, where you get a new partner, you get some new action, you might get an investment in the company. I think it's a steal here, Bonnie, or is it Anne? Anne, that's Anne Marie. I think Bravada is a steal, especially at a dime Canadian or under a dime. Once the market starts to go up again, as we saw this in early 2016, when the mining stocks caught a bid and they started to move, certain stories do better than others. And Bravada was a top performer. Stock went from 3 cents to 40 cents in a very short period of time. And that's indicative of what I think will end up happening to a degree going forward in the next run. Bravada will at least be in the middle of the pack. And it could end up being a very good performer, similar to Southern Silver as well. So, Mac, let's see, the watch list question, I can't help you with that. We're going to have to go back into, I think you had some answers to that in the Facebook group for premium members. I'll have to address that separately. I'll relook at it. If I only had money to buy one stock, then what stock would you buy? If I only had that much money, I would probably go to Colombia for a weekend instead of buying a stock, or to Brazil or to Hawaii or on a trip for an experience rather than put the pressure of just buying one stock on that stock. But I get what you're saying. And I think, Mark, the answer to that is Metallus Garibaldi. Pick one. I think you've got my top pick being Metallus. I would go with Metallus. But if you want to be a little bit more conservative, then you would go with Garibaldi based on that theme. What is your top favorite stock for the following? Gold. In a generalist perspective, one that everybody can buy and it's not too illiquid or slow priced, it's McEwen Mining, I would say. Silver would be First Majestic. Coal would be Canadian or Colonial Coal, but that stock is already tripled since we recommended it in premium. And I'm not really too keen on putting a lot more money into coal. I think if anything, I'm looking to loosen up that position more and more as it goes up. We'll end up making, maybe 5x plus on that bet. But it's more of an exit than a, hey, let's go find the next coal opportunity. Nickel, I have to think because I have a top pick here, but I'm not going to tell the free list. You will know about it in the premium list. Maybe eventually we will talk about it in free, but we've not had a chance to really accumulate enough of it in premium yet, so I can't divulge that. Let's see what I can say. What I can say is, nickel's Garibaldi is a way to play nickel, if you want to look at it that way, which is something that we've talked about in the free list. So Garibaldi's, this is a nickel play. It's a very high grade nickel. It's insanely high grade nickel, and it's a discovery play, but nickel it is. Cobalt. Two stocks, Canada Cobalt Works and Cobalt 27. That's how we're playing the cobalt market. We have one, junior exploration company that I think is the best story out there. Good share structure, good valuation, really good overall. And then we have Cobalt 27, which is more of, I would call it the blue chip pick, where they have physical cobalt. And then now we're financing streams and royalties and things on cobalt production in the future. And they've got a lot of money. They raised like $400 million. KBLT, it's been down this week on the Tesla news. I would start to accumulate Cobalt 27, as well as Canada Cobalt. I think this shellacking with Tesla is certainly slowing things down in the sector. But that, the electrification of vehicles trend is going to continue for decades. Penetration rates, call it over the next 5 to 7 years, is where the drivers of these metals and these stocks are really, you're going to have tailwinds in these areas. So keep that in mind. I mean, it's not, if you want to make a lot of money on these things, you really don't want to put a time frame on your bet. You want to look at the market and dictate when to take money off or what to do when that theme is played out. Or at least part of it, you want to hold for the duration. Lithium, so there's a couple of lithium plays. I'm going to have to also get into this with, we have a couple of new picks. One pick for sure in premium for lithium that I could be a good play, that I think could be a really good play, could be bought out. But I'm going to give that to premium first. Besides that particular issue, and maybe one more, I'm really not super bullish on lithium plays. There's a lot of lithium out there, and there's been a lot of money that has gone into this sector, tremendous amount, and a lot of companies, to get involved in, and lithium isn't really that rare. So I think a lot of that theme has been played out. We made really good money on Millennial, which I'm going to pull up right now and just kind of take a quick look at again. I haven't looked at it closely recently as we've taken profits. And it looks like we started taking profits at the right time, around $4 and higher, when I put out those notes. And now it's down quite a bit. So is that a good buy here? Maybe, could be. I don't think that it's over, but there might be a bit more of a lull with the lithium plays. I think it would probably be good if they get washed out a little bit further, but you're going to have your one-offs. You're going to have a Millennial Lithium or this other company that we're looking at that'll get bought out. You're going to see more and more of that, and I think that's where you can make some money on the lithium companies. I do still like Millennial Lithium. They've got a great story. The stock's now been chopped in half from the highs earlier this year, so I would say relook at that one, if anything. Vanadium's very easy. It's cornerstone, as we just talked about. Timberline we've discussed as well. Here's some more queries. Again, anybody who has some other questions, you can email them or just put them into the chat to the right there. And I will get to them. We're going to try to wrap this up in the next 20 minutes, but I also want to use these Q&As just to sort of puke out as much information as I possibly can. From an audio perspective, and just doing this, it's so much easier than trying to type out, detailed updates on all this stuff. It takes forever. Really not a question, as such, but something that would greatly benefit us subscribers with limited cash left to put to work once gold breaches the 1400 mark is to let us know your thoughts on the best 5 gold silver plays that you see at this stage of the cycle so we can aim for max gain. So Warren, I don't know, maybe you are a premium member. I don't know if you are or not. I think you might be. I recognize the name certainly, but if you are, then you have access to the top 5 silver play report and the top 10 junior gold sector report, so we could play off of that. There are changes to that, obviously, like Timberline is off at this point because a lot of the theme is gone. It doesn't mean that I'm going to sell it, and it doesn't mean that it's going to be a bad performer. It just means that it's not going to be the cream of the crop going forward based on this development. But yes, I mean, I'm going to continue to focus on the best plays that I think could maximize returns. But at the same time, it really depends on your risk tolerance and the amount of capital that you do have, because you could simply buy the indexes, buy more of the indexes, buy more of the junior indexes. You could, if you're more conservative, it's the physical metals, more of the physical metals. If you really want to go down the rung, I mean, I think you probably have a pretty good sense, especially if you're a premium member, of what my favorite plays are. And my biggest positions remain things like Timberline, Southern Silver, Bravada Gold, Orca Gold, Gungnir. First Majestic is my biggest silver position. We own Great Panther. We own Dolly Varden. We own, some of those are very, very high on my list. We're doing 2 new private placements in the silver junior area that I think are excellent. That will be out this week. More details on that. So you guys can look at those new ideas, which have a lot of upside. But stay tuned is what I would say. Once we get through that mark, and I'm really pounding the table, I will be talking more specifically about my favorite ideas, certainly at those times as well, and try to separate the wheat from the chaff, so to speak. But as you know, and just as a comment, as an aside, these sectors trade so much alike. We can tweak alpha and get alpha out of the markets, particularly with trading, by buying things that have lagged and that are going to play catch up, or that have an impending catalyst or a buyout, and we'll zig and we'll zag to capture those type of gains. But the most important thing is just to be allocated. And if you don't want to take as much risk and want to make sure you want to participate, you just buy the producers, whether it's McEwen Mining, that's a little bit smaller in that sense, or you go up to buy Goldcorp and Barrick, you're going to participate in a nice way. What is general thoughts of you and your contacts on the crypto space? Already bottomed or still another low to come following the 2014 or 2016 patterns? We might have even bottomed the other night, Warren, but I don't feel like it's really easy to predict whether this bottom in the 6,000s was a higher low, and then that's it. We're going to never look back from here. I think there's a pretty good chance that we could still roll over and retest and have a double bottom, which would be in the high 5,000s. What I would do is nibble here and certainly start to buy some favorite coins or build a portfolio around Bitcoin, Ethereum, Litecoin, and some of the bigger plays. This special report we have is going to have some huge winners. There are a couple of these top 5 cryptos I've found. Regardless of the price of what happens in the crypto world in the next, few months or whatever, they're going to be huge. They're going to be so disruptive over the course of the next few years. And that's where I'm very, very excited, is over the longer term trend. But I would put a little money to work now. I would put more money to work if Bitcoin retests its lows in the high 5,000s. And then, maybe you get very aggressive there. And if it breaks down below that, just stop out of some of it and take a step back and see what happens. Because if it breaks those lows, then we're probably going to 3,000 or 4,000 on Bitcoin before it finally bottoms out. That's going to be a key level to hold, and we might be hit basically securing a higher low here. Too early to tell, though. I don't frankly have a really great handle on whether or not we've bottomed right now. I would say we probably have not, but it's possible, which is why, again, the best way to do this and to play it is to just accumulate your favorite areas. And nothing has changed with Bitcoin fundamentally except for the price. So, I'm buying. I've been buying. I had a bunch of cash come in a couple of weeks ago. So before this started to crater a little bit more, and I was deploying it in a bunch of different coins. I own like 40 different coins or tokens now. And I bought some more Ethereum, bought some more Litecoin, bought a couple of my favorites, bought a bunch of new stuff. And then, I'm going to do some more this week. Probably not as much because I just don't have as much cash laying around, but I'll just continue to accumulate positions in this area because it's definitely not over. And I can tell you that. Whether it takes, another month or week to bottom and start to move up, or it takes another year or two, eventually this stuff is going to fly again. I can tell you that much. I really feel confident in that statement. Looking forward to gold finally breaking out. It has been a long, drawn-out consolidation indeed. Couldn't say it better myself. Let's see here. Russ, any news on the Canamix pre-ICO and pre-ICO discount? Not yet. I have to check in with David Vincent this week. I will keep you posted. I want to find out where they're at in the raise for the royalty. I don't have any idea where they are. I think it's overdue that I talk to him. Let me get to him and get back to you on that. They're going to have to close out the royalty play before they really move forward on the pre-ICO. And it's really a function of how far along are they. Mark, haven't talked about uranium. When will the spot catch up with long-term contract pricing? It has been hard to get a feel for how existing inventory levels are changing. I agree with you on that. And I think that I've recently paused on my uranium thought with very conflicting information where I've just said to myself, I'm just sitting tight. We've already got a lot of really good sized positions in things like Encore, Canaccord, Anfield, Appia. And so, I just kind of hit the pause button and said, well, maybe this is going to take longer than I had anticipated. On the other hand, one thing you'll know about me, and I think hopefully some of you respect, I'm rarely a guy who's going to talk about on the other hand. I try to make calls. And if I'm wrong, I'm wrong, but at least make calls that, somebody can bet on instead of the flip-flop. And I'm not flip-flopping. I'm just saying that on the other hand is that with Kazatomprom and with Cameco cuts and with all these significant supply cuts, they are going to affect the market. And my sense has been that sometime in Q3 or Q4, I've got to believe that we are going to start to see pricing catch a bit of a stair step higher. But Mark, I got to be honest. I mean, I don't feel like I can pound the table on that. And I really am watching the activity in the market lead me to show what is reality. Today we had a pop in Cameco, which was very interesting. It actually is a very meaningful breakout if this holds. So I want to see tomorrow. I would like to see Thursday close above the 200-day moving average, which is at about 941 US. It closed at 971. But when we popped above this moving average, and Cameco certainly will be a leading indicator of when spot and when this stuff is going to start to really kick into gear on a sustainable basis. And I bought another 3,000 shares on margin today. So even though I've got a bit of a passive call attitude on it. I saw this breakout today and I added to my position because I know it's going to happen sooner or later. We are going to see another bull cycle in uranium. It's just, there is a lot of conflicting information out there. And there's also, it's hard to read, on the supply side, how much these inventories are actually coming down. But I've had a sense, and I think I'm going to stick with it, which is that second half of this year is when I think that we will see something that's meaningful. Okay, so Russ, Orca drills results are fantastic. They find mineralization everywhere they drill. How do you see Orca unfolding? What is more likely? Will the current management team take Orca to construction and production, or do you think they would be bought out? Do you see a 10-bagger from these levels? So we talked about the 10-bagger element, which is very possible. What they're going to do is they're going to continue to move the project forward to construction and basically look to take it into production, just like they did with Redback. But they're going to sell it. Whether they sell it soon, I don't think they're going to do it too soon. The value that could be created here with a bit of a more robust gold market could be very significant. These guys nailed the last cycle, which is really very, very important, as we saw, to maximize shareholder value. They still work with Kinross. I wouldn't be surprised if they get bought out by Kinross again. But they're gonna do both. They're gonna end up moving this thing towards a production decision and construction, while with their eye to the right, talk to potential suitors that could buy them out. Eventually, they'll get bought. When will they do it? We'll leave it up to them. They're better than me at figuring that stuff out, and there is a lot of upside for Orca, certainly. Orca's, again, it's going to be a stud when things heat up again. It's going to be a stud. Let's go back to Q&A. Let's see. Okay, we've got a few more here, guys, and then we're going to wrap it up. We've got a decent amount. I'm going to try to go through these fairly quickly and wrap up in 10 minutes. Charles, on Great Panther, I'm going to get back to you on that question, just about Peru. Do you still recommend CCW? Why is it declining? Is that it's a hold on in the dip kind of situation? It's a buy on the dip situation, Brian. I think you got to be adding to your position. If you believe that cobalt is still going to be in a bull state, Canada Cobalt is my #1 pick in the junior space. We've talked about that a little bit tonight. And really, this is all correlated to Tesla. If you saw some of the news and some of the action in their stock, which has been battered lately, that's affecting, I think, lithium and cobalt plays right now. I think it's temporary. Cryptocurrency, could you talk about it briefly in regards to where it is now in your thoughts? Maybe about investing in blockchain versus the actual cryptocurrency assets themselves, Steve. So thanks for the question. Again, looking at the short-term action, can't really say for sure if we're bottomed out, close to a bottom. I think we probably are. I would really pay attention to that previous low. It's possible we see a double bottom. I wouldn't want to see the double bottom broken on the downside. That could mean significant further downside. But sentiment is totally cooled off, obviously. People have gone from, telling their brothers and their sisters and their mothers about Bitcoin to buy it at 18,000 to like complete bewilderment and just like getting steamrolled. I mean, you're down 75% in like 2, 3, 4 months. This has hit people hard and fast, and it's been severe already. So I think we're going to be close to Bitcoin and the cryptos making a move higher. Certainly this year. I think it could be even sooner. This stuff seems to be accelerated in terms of the types of moves they make versus time. This is an area that acts out quicker than normal, but it's still a market and it's going to act as a market does. The blockchain companies, for example, versus the cryptocurrencies and the tokens, I prefer to own a mixture, but really I would say you own 70-30 is what I think I own. 70-30 to 80-20 in favor of the actual currencies and tokens and coins, because they're the utility themselves in a lot of cases. They're the currency themselves in a lot of cases, which have great upside within the prices of themselves as adoption occurs and as businesses get built around the function of the utility of these coins and tokens. But at the same time, you have some interesting blockchain companies. Things like Hilltop is very unique because they're a security play versus just being another mining company. I think if you're looking at a mining company versus the cryptocurrencies, you have to ask yourself, like, what's the real benefit of buying a company that's mining Bitcoin versus just owning the Bitcoin themselves? And that's a function of their business plan and their ability to execute. And what are they offering there? So is there a real tangible ROI that they're presenting, a way for you to make more money from the mining of these currencies versus the actual currencies themselves? That's going to determine whether or not you think that that's the case. But I think in general, this will be something to the effect of like, just buy the index, or do you buy an active manager? Are the active managers going to outperform the index? In most cases, they do not. It's going to be a very small percentage. So I would rather own the cryptocurrencies themselves first and foremost, and then look at, on an individual basis, some of the blockchain stocks and plays. But I think, 70-80% of the money, if you're going to have it in this asset class, why not just have it right into the currencies and into the coins? Cannabis wheat, I'm still bullish, Spetty. Before I get into that, Nova Gold. So, Ken, with Novo, we avoided the stock and never got involved. Heard about it, as it really heated up. Was it late last year? Yes. So, avoided it, and now it's recovered a little bit. So, listen, I mean, Novo is an area that I just don't have a lot of confidence that they really have something to substantiate what they're claiming that they have to substantiate at this point. There are people like Eric Sprott that are smarter and more successful and richer than I am that believe that they do have what they think that they have, which is the next Witswater or whatever it is. Maybe they do, but you have a massive market capitalization based on some nuggety finds in the field at surface that really doesn't tell me enough. You have a $700 million market cap where Novo is right now, Novo Resources, and I just don't see it. I mean, I just don't. I don't have any sort of. I would say that it's certainly possible that this thing could be a massive home run, and they've got the biggest thing since sliced bread. But I don't have any conviction on that, and I don't own it. I'm not going to buy it. It's just the way that it is. And God bless the people that got in there early. We had some elite members that I know did and made a lot of money on it. Fantastic, And I wish everybody that owns it well. There seems to be a lot more bashers on Garibaldi and Metalis than there are on Novo even, but I don't think Novo has even half of the data or indications that Garibaldi does. So my 2 cents. But again, I'm not in it, so I haven't really examined it inside and out. What I've looked at, and I've looked at it a few times, doesn't attract me to speculate at these price levels. GMA. G Omega, Don, I do not own it. I think that might be a rare earth play, is it? It's not on my radar screen. Cannabis Wheaton. So since you initially wrote it up, they have signed many large JV streaming deals, which have greatly increased the amount of equivalent production grams they're entitled to. At last count, I believe that they're entitled to somewhere in the area of 425 million grams a year if all JV streaming deals are finalized, making them one of the largest marijuana companies in the world in terms of equivalent production. However, the finalization of construction of some of these deals has been pretty slow. The biggest one so far, a JV they signed with FV Pharma, that will result in 200 million grams per year for the benefit of Cannabis Wheaton, was recently finalized so that they should put a solid floor in place for them. They've also completed other deals. Okay, so are you pitching me on it, Spetty, or or what's? Let's see if there is any question. I don't know. On the downside, given all this, do you think about the Canadian marijuana stocks industry in general and cannabis wheat in particular? So I think that it's probably time to take another look and buy some of these stocks because they've gotten whacked pretty hard. The sector, there's been a lot of cream that's come off the top. There was a lot of hype in this area last year, obviously, but there's legitimate business opportunities, and I think cannabis wheat is going to be a leader. And the only concern is how fast they're moving and how much they're diluting their share structure. But I think that they've got a really, really good model, and they're going to be a leader in terms of performance. And they're going to perform with the sector for the most part for the next probably year until they really start to see revenues and cash flows be able to drive the valuation. And I think that should probably be somewhere in 2019 that people get a handle on the growth in the actual numbers. In the meantime, it's going to be a lot of speculation, but they're a real deal. And I think that if I were to look at many of the marijuana plays, that's one of them. That's one of the top ones. And it's still the one that I own the most of and for free, because we had a big run and we made a lot of money in the warrants, sold off the principal risk there and own it for free. So that's why it's one of those plays that I really don't care about too much because we have no risk in it. But I do still like it, Mike, and I think it will do well over time. Okay, so there's a few more comments you had there. I'm going to reread that later. So Steve, you want to know about the max downside on Timberline. The max downside is zero, just like every one of these stocks. If they can't raise money, it could go bankrupt. I'm not going to let it go bankrupt. We're going to move it forward and build on Eureka and Seven Troughs. Where could it go in the short term? So let's just think about this, okay? Today I'm just being blunt on this, guys, because look, whatever, Tallapoosa didn't work out as we wanted. We have to deal with reality. I don't have any interest in artificially inflating any of these companies. We need to make our bets based on what the fundamentals are, right? And so 515,000 shares traded in the US today, 406,000 traded in Canada. So we had about 50 grand worth of stock sold today, and it was down 20%. In Canada, we had about 32 grand traded, and it was down 31%. So when a stock can move down that much on such little volume, then this thing is susceptible to another move down in the next couple of days. Because the buyers, nobody, I nibbled a little bit today in there, but I'm not that motivated until the dust clears. I want the dust to clear before getting really, active in the market again and make sure we have the right plan to move forward. I will be working with the largest shareholders and management in the next 2 weeks to determine what the right course of action is, whether that is buying more properties to put in to the vehicle, raising money, how much to raise, at what prices, how much drilling could we get done at Eureka, which has some very juicy prospects and targets that we could hit short term. Seven Troughs, where does that come into the mix? Is it a priority very soon after just getting some Eureka work done, or do we put it on the back burner? We have to look at our balance sheet in terms of our costs and burn rate on a monthly basis. All these things are going to be done in the next week or two. And in that time, we'll see where the market, flushes out. I mean, I can tell you that if it goes to a nickel, it's stupid. It's ridiculous. I mean, you've got no value whatsoever would be put on the Eureka project. Shells in Canada are going for over $1 million right now. So keep that in mind. If you're trading in a Canadian exchange, not to mention the US listing, I mean, in Canada, you can't find them. So just having the shell is worth $1 million. And then we have 700,000 ounces ish at Eureka and the Seven Troughs project. So at 10 cents, we've got a market cap of $3.3 million. there are hot dog stands that end up having bigger value than that do more revenue than $3.3 million that I know of in Chicago. So it's not like we're coming from a point where this thing had a huge anticipation built into the stock that Tallapoosa was going to happen, and then it didn't, and it was falling off from a $30-40 million market capitalization where you've got a tremendous amount of downside risk. I think we're probably about there. I mean, maybe tomorrow we have a little flush out or something, or even Thursday, somebody wakes up from vacation and says, oh, I just read the news and screw this thing, I'm out. Could be anything with this low of volume and activity. You could have a little bit of a flush. I would welcome a flush out to a nickel. I actually would, because I already have staggered bids in, 8.5, 8, 7, 7.5, 6 cents, just small ones that are in the market in case we get somebody who says screw it and panic sells or just hits the bids, because it won't stay there. So it'll bounce back. And my sense is, if you want me to guess, that between 10 and 15 cents US is where we're gonna stabilize. And that's probably in the ballpark of fair value, probably 15 to 20 is fair value. So maybe we have some stink on the stock for a month or two, and it trades between 10 to 15, and then we'll see what happens. But it's not going anywhere. They're not going out of business. So you can bank on that and then determine what you think is appropriate if you are going to buy any more shares, or if you're just going to stay neutral, or if you want to cut your losses, move on. Nobody's stopping you from doing that either. Let's see if we have anything else here. We're at a little over an hour and a half, folks. And we're declining on the watching, so I'm going to wrap it up. Let's see if we have any more here. Okay, so Cregan, I'm going to get to yours. Looks like you have a bunch of stuff here. I'm going to blow through this, maybe one more, and then we're done. Cregan, sorry. Updated info on these stocks. You've recommended many stocks. Taken upwards of 50 positions with you, maybe too aggressive. Wow, that's a lot. Haven't heard updates on some of these. So your continued prognostication on gold for the last several years, well, this is for last year, is that the price will be at least 1,400 by year's end. So that was my last year prediction. I don't think I said that in 2016 for 2017. I might have, but I don't think so, because it was basically there for more than half of the year, almost there. We've seen the resistance area at 1350 hold. None of the normal catalysts that are positive for gold have been strong enough to spur the price and build upward momentum. Will it take an actual war or huge inflation or a major drop in the dollar to achieve this $1,400 mark? What's your latest on gold and silver? I don't know what it's going to take, Craig. Something's going to do it. And technically, we're continuing to push up against it with higher lows, and something's going to give. I mean, either gold needs to roll over or it's going to break out. And I think that you can look at it one of two ways. One is it's frustrating, but the other is that, we're coming off of with this Goldilocks environment, gold maintaining 1,300. I think it's been pretty strong. The one thing that concerns me is we're not seeing activity in the gold stocks to predict the move higher, which usually happens. So, the equities will lead the market on the metal. I think I don't have a great handle on why that is not the case yet, but I think it will kick into gear, and it will happen out of nowhere. And all of a sudden, you're going to see a bid in these stocks. Is it going to be after gold goes above 1,400? It absolutely is going to happen. If gold sticks above 1,400, the gold stocks are going to act a lot better. I was on Palisade Radio on Friday. I made a prediction that within the next 2 months, by the end of May, we're going to break above 1,400. That's based on mainly my technical work. It's based on my technical work, and I think it's going to happen. So we'll see if I'm right or I'm wrong. I'm very bullish on gold and silver long term. We are in the right place. We are in the right space. This is silver in particular is probably the cheapest asset in the world versus anything else. Historically, it is extremely, extremely cheap, any way you slice it. Gold is very well priced. The gold stocks are very cheaply priced historically. We are in the right area, and we will make a lot of money if we hold on until a better environment is upon us, and it will come upon us, and it will come upon us swiftly, just like in 2016. Remember how powerful that was? That's what's going to happen again. And silver is going to act like Bitcoin was when it was going to 20,000. When we see silver really kick into gear, it will rip your face off. It is a frustrating, frustrating metal and investment for years, sometimes decades, and then it will rip your face off, and it's going to happen again. We're going to wrap it up here shortly. Gungnir lost a lot of value since it hit its high near 17 last year. It was in the 20s, actually. I am extremely bullish on Gungnir. So when we look at, I think, three of the biggest junior gold stocks I've always talked about in the last couple of years, because we funded all of them, is Gungnir, Bravada, and Timberline, all like in the smaller, really tiny junior area. Nothing at all has changed with Gungnir or Bravada fundamentally. The stories are all still intact. When the market is down and the stocks are down, we look at these things and we look at them with this skeptical, glaring, negative lens. When they start going up, we look at them in a glossy lens. And that's when the big potential and everything starts to become evident to everybody. It's just the lens that we're looking at it through. Timberline's had a material change. They lost Tallapoosa. It's a big difference. So the prudent thing to do is to pause that and hold it and reset and basically take it from one of my top picks into the middle of the pack at a minimum going forward, because of a material change. Gungnir and Bravada are full steam ahead. Gungnir in particular, they're going to get another $1 million in less than a month, and they've got a drill. They've got their permits approved in Sweden. They're moving forward. This is a very exciting stock, and I really think that we're going to do very, very well on Gungnir. If you're buying anything else at the 10-cent level, I think Gungnir could triple or quadruple by the end of the year. That's based on a combination of just drill results and some enthusiasm around that, and also some anticipation of the gold price improving. Is Cache a dead duck? We stopped out of Cache, if you recall, a while back. I don't know, Craig, if you're a premium member. I would hope that you are if you own 50 stocks. But I actually think it would probably be a buy here now because it is a dead duck, but it's not going to go out of business. And the guy behind it is a big promoter, and they're not going to let it die. And I think once gold catches a bid again, they're going to push it hard, and it'll go up a lot. So I would, you could buy some at 4 or 5 cents. It'll do well. Colorado have any news lately? Yes, they have. It's been a shit show. That's what I would call it. It's a bunch of management and directors that are fighting over a bunch of stuff, and I just don't like it. I mean, there's better things out there to buy in the Golden Triangle than get involved in this Colorado situation. So I think, unfortunately, it's a sell. No update on Equatorial. We sold Equatorial as well, if you recall. Would need to know if you're a premium member to give you the correct numbers on that. Northern Dynasty, I'm bullish. I think it's a buy. Golden Predator, I'm going to have an update with the CEO tomorrow. You guys will have an update on Golden Predator this week. Platinum Group Metal, yeah, we sold out of these, Craig, and you got to also follow the sells. I mean, some of these I have not updated in a long time, but some of them I haven't updated because we sold them. Platinum Group Metals, I officially came out a while ago and said, it's a sell. We're going to take the loss. So Silver Grail down 35% on low volume just today. Anything significant here? So that's meaningless. I actually have a pet peeve when people bring up a big decline or a move up when they say, hey, what's going on here? When you have, let's look at the dollar value, okay? This is actually Funny, probably. 9,000 shares times 6 cents. $540 worth of stock traded today. And we're wondering, is anything going on? The answer to that is no, nothing is happening. But I like it. I like Silver Grail. I think it's going to heat up with the Golden Triangle this summer. The Golden Triangle plays, so even Colorado probably will improve, but I just don't like what's going on with the fight, the proxy fight there. I'd rather deal without the drama. Silver Grail has got some great projects. They've got silver in their name, believe it or not. At some juncture, it's going to be like stocks that have Bitcoin in their name when Bitcoin was running. That's what's going to happen to the silver stocks. And Silver Grail's got a tiny market cap. They have some money. They have good projects, and they're in the Golden Triangle, and I think it's a buy. Timberline already discussed. Zenyatta. So, we've left Zenyatta a while back in terms of coverage. And, they made some gestures recently because there's some shareholders that are rightly complaining about management. Basically, I don't like the management team in place. I think that they've ruined what could be a very good situation in terms of the stock performance and execution on offtake agreements and other things. And they made some gesture which was BS. So it didn't impress me. I think if they would have made some sweeping changes on the management side, or something meaningful, they could keep Aubrey around, but I think he would be better suited as a technical guy and not the face of the company. I like the asset still. I still do really like the asset at Albany. I keep an eye on it. I just say, I'm going to keep it at a hold. That's what we stopped covering it on, as a hold, and I'm going to keep it as a hold. If there's anything developing there, I will let you guys know if there's a reason to buy them or just to get out altogether. For right now, I don't think it's either. Uranium stocks, yes, we're waiting. Lithium stocks, also not, and so you're mentioning some of these plays like Millennial. Did you take any profits when we advised to take profits near $4? I didn't say to sell it all, but I said, take some off. We had a quadruple in not that long of a time. So, Craig, and if you're not a premium member, you need to be a premium member today because you're missing out on a lot of updates that happen. Okay, so I would make sure you do that. I think you might be. So if you are, I apologize, but you're still missing some of these updates. Canada Cobalt had a negative impact. The stock flew and doubled into the name change. I don't know what you mean. Cobalt is getting hit. The Cobalt stocks are getting hit with Tesla this week and last week. That's why it's down. There's a lot of reasons why I like Canada Cobalt versus Cruise Cobalt. Cruise Cobalt was an early mover in buying up land with cobalt potential, all early stage projects, no resource. Canada Cobalt with the Castle mine is a past producing, very high grade cobalt silver mine that is basically putting out 2.5–3% cobalt grades on samples and assays. And they have an underground adit, a very developed underground access, a separation technology that could be extremely valuable. And I think a tremendous amount of high-grade cobalt that could be a near-term producer. That's why I like it better than Cruise. Cruise will do well if cobalt does well. Cruise will not do well if cobalt doesn't do well. But I like to pick my spots in these niche markets and just bet on like one or two players. So I'm very content with Canada Cobalt and Cobalt 27. In vanadium, we just have Cornerstone. On the elite stocks, yes, that's a different ball game. And so we are down to lesser people, and I think it's about time for us to wrap up. Let me just see if there's one last question I could grab here. Some of these, some folks are getting a little nasty about Timberline. There's one guy in particular, I'm about to boot him off of our lists. He's just a dick. Valterra, I believe, is a buy, Scott, and the placement, there's a little bit left for us this week. So if you want any at 3 cents with a 5 cent warrant, I would encourage you to do a little bit. The horizon is that they are working on another acquisition of a very interesting property, which at that point would put them in the three product category, three asset category of Swift Katy in Canada, Weepaw in Nevada, and then another element that could be very, very juicy. So Valterra will be built from the ground up, and I think it's actually got some good progress. It's one of those stocks where, like, look, it's at 3 cents, you get a 5-cent warrant. It's not going to go out of business. And when gold heats up, it'll triple or quadruple pretty quickly. And I think that's it, folks. I think that's it, folks. We've got a couple of random questions, but again, just to reiterate, so David's asking about the main obstacle for getting a deal with Tallapoosa, and what is the new timeline to progress and develop Eureka, and how much will it cost? So, the main problem, I think, with the Tallapoosa deal was the deal, the structure of the option agreement with Gunpoint. Because if you think about it, I don't think it had any issues with the asset itself. There's a little bit of hair on it, but it's a very, very good asset and very developed. And I think that if you're a buyer or you're a partner, here's what you were looking at: cutting a $2 million check last Friday. Okay, in 12 months, you have to cut an $8 million check and put a bunch of money to work in the ground. It's a big commitment. In addition to that, there was a kicker that you have to come up with another 10 million when gold goes above 1,600, which at that point is probably more of a rounding error, especially because half of it could have been done with stock and half with cash. But there's a lot of obstacles there. There's a lot of cost on the front end. Then you have to develop it. And I think that when you look at the asset itself, there were some questions around the quality of the PEA as it pertained to a small part of the asset, which does have to do with a couple few hundred thousand of the ounces. We feel that was addressed and could be rectified, but people are picky in this market, and nobody's going to take a big sweeping, $20 million commitment or so, unless they're a little bit more motivated with the gold price. But, look, I thought we would get something done. I thought that the market, even though it had been weak the last year, that there's not a lot of projects like this laying around. That said, I think that Gunpoint has an unrealistic view of what they can get for the project. I think at the end of the day, they decided, let's put this back on the market and see what we can get. And I would be shocked if in the next 6 to 12 months, unless gold just explodes, that they get a better deal, a better structured deal than they had with Timberline. And look, we had a deal on the table to buy our option, make the $2 million payment, tweaking the back end of the commitment just a bit. It wasn't bad, but they elected to take it back at the end of the day. So it's unfortunate that we didn't get anything for it. I would have been pleased if we would have at least got the deal that was on the table last week, but we live in when we move forward. And I think with Eureka, what's the timeline? Listen, it's going to depend on how quickly do we raise money, at what prices, because you have to raise capital. I don't want to dilute this thing to oblivion. It's a very good share structure right now. It's one of the things we have in our favor. But what are we going to do? Raise $500,000 next? How much work can we get done at Eureka there with that amount of money? There's some really specific targets that we want to drill out that could really spruce this thing up a bit. But there's a lot of gold at Eureka. It's just it does cost money to prove it up. So the question comes down to capital raising and market environment, and what price points do you want to raise? How much capital? But there's a lot more gold at Eureka. There's also some really interesting prospects at Seven Troughs. And there's also some possibilities that we could acquire other projects with shares. So I think we just take some baby steps. We have to take reasonable steps to maintain the share structure, yet move things forward. I'll be over the moon when we finally start drilling. We've had all this Tallapoosa stuff going on to make these payments, but there's been no work done for 2 years. So once we start to drill the Eureka, if we have some good results, this thing is going to heat back up again. And it should, because we're dealing with, what's the value now? I mean, we're talking about $4, so 650. I mean, we're like $5, $6, $5 an ounce in the ground right now with the market cap of Timberline, just with Eureka resource. I'd like to get that over 1,000,000 ounces. Certainly, we want to get that over 1,000,000, and then I think that's really going to be something that could be in play. There's also the ability for Timberline to bring in a partner on Eureka. They've had a lot of discussions there. And, look, I think if gold goes above that 1,400 and we get a better tone in the market, somebody's going to want to either buy that, they're going to want to partner with us and JV it and start to build it forward and drill. There's a lot of possibilities there. So we're going to start out slow and not raise too much money too quickly, but we're going to move it forward. So you're going to need some patience, I think, with Timberline to really make some money. To recoup your investment, wait until the gold market takes off and blow out a Timberline early, earlier than you normally would. There's no reason, if you don't believe in what they're going to end up coming out with and doing, or believe in Eureka or Seven Troughs, that you will want to stay in it longer term. I'm in it. I'm in it too deep, and I got all you guys in it. So I'm responsible for it. So I'm not going to let it go out of business. I'm going to be guiding management on moving forward and starting from where we are and make progress. That's my main goal, is to move it forward and make some progress and to build value from here. So that's what I got, guys. Thank you so much for joining tonight. It's been 2 hours of pure, utter content. I hope at least some of you got a few things out of here that you could take going forward. And I really appreciate you all just being subscribers and sticking with me through good and bad markets, good and bad situations. I feel like the future is very bright for us, and we're getting very close. We are getting very, very close. I can taste it. It's going to happen with gold. And I wish you all a good night.